Well, the banking industry in Boulder Valley, I think, is pretty well situated relative to the rest of the nation. Because of the diverse economy, I think it's going to feather quite well. The concern overall with the industry for me is where it's going to come from the regulatory environment. There's been a blueprint that former Treasury Secretary Henry Paulson looked at about having a single regulator, and with that comes a lot of change. It will certainly be different in this new round of TARP funds from the previous round. I think the level of infusion and how those funds will be infused into the banking sector will be different. Capital versus going after bad assets and actually keeping businesses afloat and people in their homes. So I think the focus will be different in how it's distributed, and that will be good for America.
Our bank in particular, as relates to TARP, it may seem unusual. We are a wealth management firm on a private banking platform, and we applied for TARP funds because it's a very effective cost of capital for us. So I think that's been a positive for the banking. It hasn't been as positive as one would have hoped starting out. Going forward, it's hard to know. We have to see what that outline looks like, what the regulations around it are going to be.
Most of the bankers that I've talked to are less interested in taking TARP money than they were when it was first announced, and that's because of the strings that become attached. I think they're seeing that maybe I'm going to make it through without the extra capital required, that there are other sources of capital that don't come with the restrictions and the strings and the cost that is associated with TARP money.
I just don't see near term or even long term where we're going to see a dramatic economic downturn here. I really don't. We also didn't see the big ramp up in property values and the big ramp up in population growth and the big ramp up in excess supply of housing. And so at the end of the day, I don't think we've had a supply and demand imbalance with housing stock, with commercial development, and in Boulder in particular, I think the supply and demand imbalance is not at an unhealthy state. In fact, arguably is probably at a reasonable level right now.
6 months to a year is still going to be pretty difficult. We're going to make loans that make sense. We're going to make loans to relationship customers that we do business with. And those people, for the most part, will probably be successful. They may not be wildly successful, but they're going to be successful, and they'll be able to meet the payments, they'll be able to meet their payrolls, and all of those sorts of things. I'm very optimistic after we come out of this issue that we have come down to a rock bottom. The prices have reduced to numbers that make much more sense, that offer opportunities for everybody who has a good idea and a good business plan to probably prosper substantially over the 10 years from 2010 to 20.
I think we'll see more business formulation, more entrepreneurs coming forward as things start to improve. I don't think startups are going to lead us out of this recession.
As always, small businesses need capital. You have to start with capital. You have to start with a good idea. And it just takes a little bit more capital in today's world because you also have to get the payment down lower. Your volumes are probably going to be lower than you might have expected in a heyday of the economy. So as a result, you're not going to generate the same amount of cash flow. You're going to have a lower amount of money that you can afford to make a payment towards. As a result, you need more capital, less debt. Now, you can get that capital from a lot of different sources. You can get it from family and friends. You can get it from other entrepreneurs who have taken their money off of the table. They've come out of the stock market. There's private equity. I've been amazed at the number of people I've talked to who have been able to go around and accumulate fairly substantial amounts of money. They're waiting for opportunities to find them. And I think the biggest challenge in today's world is trying to put those two together. Prior to August, when the shadow banking or secondary market collapsed, more people knew how to get into that and tap that market. It's more difficult today. And accounting firms and law firms and banks are probably the way that you can take an entrepreneur and help them connect with private equity and other sorts of equity that will help them get started.
We really need consumers to feel safe enough to spend. And if you have a job and your house isn't going down further in value and your 401k isn't declining further in value, then you probably feel good enough to start spending money again.
It all just goes back to jobs. And if we can keep people employed, if we can keep people in industries that then have opportunities to sell in other places, and that's where the real issue comes in. We have to sell to the rest of the country. We have to sell to the rest of the world. As those slow down, then there may be repercussions that come back this way.
If we can keep the consumer confident, keep the consumer employed, I think we will see maybe a flat line level of economic activity through the course of '09, and I'm reasonably confident that things are going to pick up for us in '10.